So, welcome to another live session. So, welcome and hope you've all had a good week and ready for this evening's session. So, let's get started. Hope you're all ready, sitting comfortably and ready to participate in this this lecture. Hello, John. Hello, Vicky, and so on. Nat, Duffy, starting to get to know some of your names now. That's good. Okay, so let's get started today. Just talking about what we're going to do this evening. Today we are going to be doing chapter number 8. So that's the plan. Looking at chapter number 8, which is called Capital Gains Release and Exemptions. All right, so that's going to be this evening's lecture. Chapter 10 we're going to do next week, which is going to be on income tax. So we're going to be moving on to income tax computations next week. And then we're going to do a bit of employment income the following week and self-employed income, and then losses in the last week. All right, so that's where we're headed. So let's get on with this evening's wonderful lecture. And we're going to start with chapter number 8. All right, so here we are, chapter number 8, called Capital Gains Release and Exemptions. And, you know, maybe I should just sort of start by, talking to you about what we're doing, you see. And if you can think about companies and think about individuals, then you see what you've got to realize is that when you're talking about companies, excuse me, I'm going to sleep. Excuse me. Sorry. Sorry, when you're talking about companies, you're talking about corporation tax. And, we're talking about all the things that a company pays tax on. And one of the things that a company pays corporation tax on is, chargeable gains. So, very, very important is companies and corporation tax on gains. When you're talking about, individuals, then, we're talking individuals pay income tax. And as we are going to, see next week, income tax is calculated for each tax year. And income tax is something that a person pays on their income, you see. Individuals also pay another tax, a completely different tax, called capital gains tax, on their chargeable or on their taxable gains. All right, so you see, this is a sort of very, very important difference between, companies and corporation tax, and individuals and income tax and capital gains tax as two, completely different taxes, and that's a very, very important difference. What we're sort of currently looking at is, how to calculate gains for companies and individuals. We're sort of like mixing it up, trying to see the similarities and also trying to see the differences. So where we've reached in our journey is basically looking at this chapter, which is called Capital Gains Release and Exemptions. And one of the things that you've got to realise is, I mean, if we talk about the sort of general rule, that if a person, or an individual for that matter, disposes of a chargeable asset, then chargeable gains are realised in the tax year of disposal. All right, so I mean, if you think of the sort of general rule, the general rule is chargeable gains and capital losses are realised on disposal. All right, so I mean, if we're talking about, you know, companies, then for companies it would be the cap in which the disposal occurs. All right, so for companies it's the cap in which the disposal occurs, and for individuals it is the tax year in which the disposal occurs. All right, so that's the general rule, that, you know, chargeable gains and losses are realised on disposal. So for companies in the cap of disposal, and for individuals in the tax year of disposal. But what we're going to talk about in chapter number 8 is sometimes it's possible for a company to dispose of a chargeable asset, make a gain, and the gain is not taxed in the year of disposal. The gain is taxed sometime later in the future. And this technique whereby, you know, you dispose of your asset and you make the gain, but you don't pay the tax on it in the year of disposal, is where you can apply something called a deferral relief. And you see, one of the things we're going to be talking about today is ways in which gains can be deferred, all right? Meaning that, you know, you don't pay the tax now, you pay the tax later on. So the benefit to the taxpayer is one of cash flow. You know, you're paying your tax later on. So anyway, let's get on to today's lecture, and let's just see, you know, how important this particular chapter is. And you can see that in the last exam it came up in 2 questions, and, you know, if you sort of look along the line there, then, you know, very, very frequently this chapter, you know, is going to be tested. So, you know, that's a sign of how important these reliefs are. And it can be tested from the point of view of a company, it can be tested from the point of view of an individual. So, you know, let's talk about this chapter. So we're going to start this chapter by sort of talking about all the things that are discussed in this chapter, all the various reliefs. And we're going to talk about all the reliefs and exemptions, and the mnemonic is GRIPPLE, all right, for all these GRIPPLed, if you like, putting a D on the end, GRIPPLed. So gift relief and rollover relief and incorporation relief and insurance rollover, principal private residence, letting, EIS reinvestment relief, and disincorporation relief. So what you've got to realise is that if you sort of consider companies and individuals separately, so I mean, if we think about companies, then the reliefs that could apply in a company question are only those 2. So companies can get rollover and holdover relief, they can get insurance rollover. But for individuals, you see, individuals can have all of these reliefs relevant to them. So, you know, that means that gift relief and rollover and incorporation and insurance and principal private residence and letting and EIS and disincorporation relief is there as well. So what we're going to talk about here is we're going to be looking through this list. I mean, I'm not going to do this one because that was covered in chapter 1. I'm not going to do this one because it was covered in chapter 5. So what I'm going to do is I'm going to do this one because, I mean, that's one of the most important ones in this chapter. So I'm going to do that one. And what I was thinking, it might be a good idea to do these ones, you see, because these are ones that haven't come up for a little while. I mean, the last exam, incorporation relief came up. So that one came up as question 1 in the last exam. So, you know, that's, you know, I'm not saying it's not important, but you know, maybe not quite as important maybe as some of the others. So sort of trying to shift the emphasis to the likely areas. So, you know, let's see how time goes and try to cover all of them. But I mean, the recordings cover the whole lot. So, you know, you've got the opportunity to learn about everything.